Good evening, folks. This is Andy Pedraza with Special Effects Academy on the start of the week session for May 12th of 2019. We will be going over our usual agenda. Take a look at the prior week's results, our currency strength meter, any fundamental announcements scheduled, as well as the live sessions that we're going to be having. An analysis of the major pairs on the daily charts, any setups we see in progress, and a few words in conclusion. We will start off with our long-term account. This one has been quiet for the fiscal year so far. We have not opened any trades on it. We simply haven't seen any relevant opportunities to enter into a really long-term trade. Our intermediate term ledger is next. We had a pretty good week. It was more of a recovery week. We were down significantly last week and in the last month or so. So we're essentially back to break even. So we did have some very nice trades, particularly the pound dollar gave us in excess of 200 pips in one trade. And we had a couple of losers, the AUDCAD actually a repeat loser. That happens sometimes. And we still have several trades open, quite a few of them, which are showing good promise for the weeks to come. So right now, this is where we're at. Intermediate term ledger, the account is down about 0.25% all told. And we are, as I said, with open trades that we will be shepherding going forward. The short-term ledger had an impressive week, almost 300 pips worth of profit in 8 trades, 5 of them winners, 3 of them losers. In particular, again, the pound was very nice to us, and we did catch one very impressive fundamental move with the Kiwi. We traded the Euro New Zealand up by a little bit over 200 pips, and we had a few other trades that were here and there. A few negative, a few positive, but the main winners were the Euro New Zealand and the pound JPY. We'll see if we can continue that that streak in this week that's opening right now. But for the week that just ended, we were up a little bit under 6% for the account, almost 300 pips of weighted profit. And well, that's where we're at right now. As always, you do have access to all these ledgers 24/7. So you can check them out at any point in time and see not just the actively open trades, but our historical performance as well. Some notes and opportunities for improvement. Well, as we saw, it was quite a stellar week as multiple trades fulfilled in our favor. We had almost 300 pips on the short-term account. A very significant improvement on the intermediate term account as well. We are keeping a keen eye on the pound pairs. The pound is showing signs of fraying at the seams already. Not sure if this is going to be a long-term move or it's just a temporary retracement, but we have to watch these. There is no alert that, hey, this is going to be a long-term move. So we have to keep an eye on them. Some of them will be long-term moves, some won't. We do have to monitor them all and probably trade them all in order to be in the big movers when they do happen. The Swiss also wants watching at this point in time. It is significantly overextended into Swiss weakness, and it is overdue for a retracement. And the USD dollar, last but not least, it does seem to be looking for a direction. There has been positive news out of the US and negative news. The market doesn't seem to know exactly how to react. It looked like the trade wars with China were working out in the US's favor. Late last week, the Chinese started not complying. More sanctions were promised by the US president. North Korea as well has been lobbing missiles across the South Asian Sea, South Japanese Sea, whatever it is that's between Korea and Japan. So it's looking a little bit dicey over there as well. So 6 of one, half a dozen of the other. It doesn't look like the dollar knows which way to jump. So we'll continue keeping an eye on it, but do be aware that it does have potential to move in either direction. Well, they all do, but in particular, the dollar seems to be looking for which way to jump. Our relative strength meter for the past month and the past week, volatility increased on the 30-day view by almost 2 points, so we're at 4.26%. This happens when a low volatility week drops out as the calendar continues moving, so the other weeks have a little bit of a boost. Also happens in the other direction when a really strong week moves out of the window that we're reviewing and the number drops. So right now we have a monthly volatility above 4%. That's quite high. Grand scheme of things. And our week, however, was pretty normal. We had 2.36% of volatility across the pairs. We can see that the pound was the clear loser, the yen the clear winner in this week that just ended, with the Aussie and the CAD being pretty middle of the pack. The Swiss regained somewhat against everybody except the yen. The euro was also significantly stronger, except against the yen and the Swiss, but it did make some nice moves. The Kiwi was a little bit bottom of the pack, gaining ground only against the pound. We had the dollar middle of the pack as well, and we have the metal. Silver was significantly down, gold was significantly up. So that's where we are for this past week. And of course, we'll be waiting to see which way the new week kicks off when it does kick off. Fundamental announcements for this week to come. We have the unemployment rate coming out of the UK, out of Great Britain. That is going to be Tuesday at 4:30 in the morning. We will be trading that one live. I think the pound is quite stressed in many ways, and obviously so as well with Brexit still on the horizon. But it is very hungry for news. So the pound is very hungry for news, and it's ready to jump at anything. Good news, bad news, either jump or drop or whatever it is it's going to do. So some of these that I normally don't follow are starting to have the potential to be, I guess, catalysts and kick off a move. So I'm going to get up early or stay up late, whichever way you want to look at it, on Tuesday for the ILO unemployment rate. On Wednesday, we have the unemployment rate and employment change out of Australia. That's going to be happening Wednesday night, 8:30 p.m. So we'll simply do our regular 8 p.m. session and then carry on from there, since there will be dovetailing. We also have the GDP quarter over quarter and year over year coming out of the Eurozone that morning, but I will not be trading that one. I can't be trading all of these early morning ones, but that is a high impact, and it does have obviously the potential to do stuff. Similarly, on Wednesday, we have the CPI core year over year coming out of Canada, 8:30 in the morning, another one that I choose to skip because every now and then I need to get some sleep. Then Friday, we have the Michigan Consumer Sentiment Index. I normally don't trade this one, but as I mentioned earlier, the dollar does seem to be a little bit stressed at this time. And as I said, sometimes these fundamentals that usually don't move the market much do act as a catalyst when there's already stress inside the market. Last but not least, we have federal elections in Australia on Friday, but unfortunately, this will be happening after market close. So the only thing I will say quite clearly is that we don't want to be in any Aussie trades over the weekend. So we'll make sure that we take a look at anything that we have open by end of week and take action accordingly. And with that, we're going to move on to the charts, starting with our oil chart. So we did have a significant retracement out of oil. Went down to the low 60s, and then started popping back up. It's traveling sideways right now, so it is also looking. I'm not sure if this move has played itself out. It hit my target definitely, so it did hit the 64.25, which was my initial target way back in the day. Went a little bit above that and then started retracing. So as I said, I'm not sure which way it's going to pop. I'll be keeping an eye on it, but as far as I'm concerned, it fulfilled what I had expected it to do. It could very well continue going straight to the top after a little period of rest, or it could start trying to do some testing of the support levels underneath where it's at. Anyway, worth watching, but I wouldn't be holding my breath until I see the move either recommence or actually do a significant turnaround. Okay, moving on to our currencies. The euro dollar is still traveling sideways. It's off its high, it's off its low. We are trading this one down in our intermediate term account, but it doesn't seem to be in any rush to give us that lower low we've been waiting for. It is, however, meant to be a longer term trade, so I'm in no hurry either, and just will continue monitoring this situation. It does have significant resistance above it, both from the Ichimoku cloud as well as that descending top of the channel. So we'll see how this one plays out. I don't foresee a whole lot of strength out of the euro, but then again, the dollar is also a little bit stressed. So worth watching. I'm not going to be messing with that trade. I'll let it play out, but I guess so. Well, this is still bearish, and any way you look at it, this is still a bearish chart, but it does seem to be taking a little bit of a breather. Our pound dollar, of course, the pound was a big mover this week that just ended. We saw a collapse of the pound across the board. Almost every pound pair went into pound weakness. We took profit out of at least two of them. Actually, we have another couple of them open right now. So we'll see if this continues. Personally, my bias is that it will continue, but of course we don't trade our biases, we trade the reality of the market. But we also have to take some risk as we do this, and the movement in the pound did trigger multiple entries on my end, which we of course took. We are system traders at the end of the day, so we'll see how those pan out. For now, this looks like it is trying to give us a lower low, at least on the daily. Everything points to that. We'll see how it actually plays out. The USDJPY, we've seen yen strength for the past couple of weeks, notwithstanding the vacation that the Japanese people took for 10 days, Golden Week. It looks like the USDJPY and the yen pairs in general came back with a little bit of strength. It seems to tap itself out towards the end of the week. We see those tweezer bottoms there for Thursday and Friday, so we're keeping a keen eye on it to see how the week kicks off. We're already short on the USDJPY on the intermediate account, and we did take some profit off of the USDJPY on the short term as well, so we'll see how this one continues. USDCAD still sideways, showing a little bit of CAD strength towards the end of the week, but nothing significant, still in essence a sideways pair. The Canadian has not been reacting as it should to oil prices, hasn't been reacting to much of anything. It seems to be rudderless at this point in time, so we're waiting for it to pick a direction as well without holding our breath. USD Swiss made a significant move down, so we saw some Swiss strength come back or dollar weakness for a combination of the two. It is to the point where I'm starting to look at this one as a potential short if that move does continue to consolidate itself and show that it does have some sort of direction. It hasn't actually broken a trend line. We can see that trend line is still significantly below current price action, traveling through the Ichimoku cloud, but it is starting to tell me that I should be paying attention to it. Some of the indicators, the MACD has flipped into a downward path, and the Williams %R has also cleared the top of the range and is traveling downwards. So looking nicely bearish, but I want to see some confirmation before we take any trades on this guy. Okay, moving on to the Aussie dollar, very sideways. It does have a bearish slant, of course, but in general, it's been more sideways than anything else. And of course, we have that election cycle coming towards, or at the end of the week. It's going to be happening when the market is closed, so not the best scenario for trading, so keep that in mind. But we'll see if throughout the week we have any opportunities with the Aussie pairs, including this one, the Aussie dollar. Kiwi dollar continues to be nicely bearish, and then we have been mainly trading it in that direction. It did have a bit of a bullish movement towards the end of the week. It looks like the downward slant collapsed. It's testing the underside of the trend line, still looking nicely bearish though. So we'll see if that is just a temporary respite, and if it's going to continue down towards the 64 level at the very bottom, which seems to be its ultimate destination. So also keeping a close eye on this one. Aussie Canadian saw some Aussie strength coming back towards the end of the week, and unfortunately that did take us out at a loss on one trade at least. So we'll be keeping an eye on this one. It did do a bearish breakout of the wedge, so technically we have to be bearish on it right now, but also I'm going to be waiting for a little bit of a breakout. It's lying right at support as we speak. So keeping an eye on it. The indicators are looking bearish as well, and we might take a trade in that direction, but I want to see the first day or so of the week and see how this one kicks off. Euro Swiss is sideways with a very wide range. We are long on this one, and we've been at profit, we've been at loss. Currently we're on the loss side. It has not broken out of that sideways. I'm getting bored with the trade, however. It's taking too long to fulfill. So if it does go back up towards the top and I see a good exit point, I'm going to be tightening our stops. And then if it continues going up, yay, we're going to take more profit. But if it retraces even slightly, I think I want to be out of this one. Euro pound, we're already long on the euro pound. We're carrying profit. We can see that it's doing a nice attempt at crossing the Ichimoku cloud. We'll see how long this move lasts. Of course, I want to see it breach the next level of resistance at the 8680 in order to confirm that we're trading it in the right direction. I'm in no rush to close this trade, however, so we'll see how it continues playing out. For now, we're in long, and we're going to be keeping an eye on it, but in no rush to close it out. In particular, the Williams percent is about to cross into the top range, which is a nicely bullish entry. We're already in it, so this just works in our favor. EURJPY sitting on a level of support, so still not giving us a clear entry. It's at the bottom of a wedge. So we'll be also keeping an eye on this one. I do see that EN strength coming back to the market quite nicely, but it still has to break out for me to enter one of these trades, at least longer term. Short term, I'll trade anything, but longer term, I'm a bit more selective as to what we get into. Euro Canadian sideways with a bias towards the top of the sideways range, which is uncanny. I mean, even when the CAD gains strength, it just can't seem to get a handhold on the euro. So it is trading towards the top of a range. I am bearish on this pair, as I am in general. I'm trading into CAD strength on the other CAD pairs. So I'm bearish on this one, but it just is refusing to give us a good signal. So we'll wait for that to happen. In the meantime, just keep an eye on it. Pound JPY, we took a nice chunk of profit out of the Pound JPY before it stopped towards the end of last week, and will likely be getting back in it. It has broken support. It's broken through the Ichimoku cloud bearish, and it has quite a bit of range underneath it until the next couple of levels of support, if not all the way down to the bottom. So this is one pair that I'll be looking for a good re-entry. Short term, intermediate term, not sure yet, but I am keeping a close eye on it. Aussie JPY, some more yen strength here, very apparent. We'll see how the week kicks off. I wouldn't mind taking some money out of the Aussie JPY, but I would be very careful to get out by close of market Friday and not be caught in the Australian federal election loop or cycle. Euro New Zealand, we took a nice chunk of change out of that third candle back. That was the fundamental. It spiked, took us out very near the top, and then continued trading sideways for the rest of the week. So it's still bullish. It's definitely in a bullish pattern right now, but it doesn't seem to have a whole lot of strength. Another one that we're going to be keeping a close eye on, because for one, I would be very happy to trade it all the way down again. but I would be just as happy to trade it all the way to the top. I just need for it to tell me which direction it is trying to head off into. Pound Canadian, probably one of the few CAD pairs that went into CAD strength for the majority of the week, actually for the entire week. So we see that nice drop, and that drop is in excess of 200 pips. We didn't catch this one, mainly because I was reluctant to trade the CAD, and for good reason as well. But we did catch the move on the pound dollar and the pound Swiss. So no complaints on this one. Pound JPY, I think, as well. So we'll be keeping an eye on this. As I said, I'm really bullish on these bullish on the CAD, bearish on these CAD pairs. So I do think they're overdue for a trip towards the bottom of the chart. It's just the CAD hasn't been cooperating, and we're not here to trade our belief systems. We're here to trade the market. And last but not least, pound Swiss, another nice pair that that did a breakout. It broke the trend line. We're in it now. We got into it late Friday. It triggered an entry. So we're trying to trade it across the cloud and towards that next level of support at the 129.50, which is a good 200 pips below current action. And well, we'll see how this one plays out. But I am pretty stoked that we're seeing some pound weakness come back into the market at long last. And the Swiss, well, it's very hard for the Swiss to get any weaker than it already is. So the worst may be over, and these may be fantastic opportunities to trade these pairs down. That is the last of our charts for this review. A little bit of the setups we see in progress. UK, well, the pound pairs, we saw that weakness that had been long expected and just hadn't come to fruition. It did finally start happening last week. Too soon to tell whether it's going to be continuing or if this is just one of the many fake outs or false starts that will happen in the market. So keep a close eye on the pound. The Swiss pairs, as I mentioned, they're all overextended into Swiss weakness, and we're starting to look for longer-term opportunities to trade the Swiss back to the mean, if not even further, into a little bit of pound Swiss strength. I'm sorry. Canadian pairs, the Canadian has been correlationless, and by that I mean that despite the improvement in oil prices, we didn't see a significant improvement in the CAD over that period of time. And now the oil price seems to have faltered. It's doing a little bit of a retracement, and then the CAD is still just not doing much of anything anyway. So this will eventually end, I guess is what I'm trying to say, and we're going to keep a close eye on it, but again, wait for it to happen. Don't jump the gun. Japanese pairs, the JPY is looking marginally stronger if slow moving. It's worth keeping an eye on for longer term opportunities. I don't care if a pair is moving slowly, so long as it's moving consistently. If that is happening, I'm going to be wanting to go into a longer term trade. And last but not least, the Australian pairs. The outlook out of the Aussie seems shakier now than even last year. And last year was terrible for the Australian dollar. And this year doesn't seem to be any improved. I had, I'm not going to say predicted, but I had sort of expected that the Aussie would have some sort of recovery this year. Not happening. Between the U.S.-China trade tensions and other local factors, it's just not catching a break. And of course, we have the federal elections this weekend, unfortunately, after market close. So we'll be keeping an eye on the Aussie pairs. I'm sure there's going to be short-term opportunities throughout the week, but again, I am going to try to be getting out of them by end of week regardless of which account it's in. And some final words here in conclusion. Discipline, we're really big on discipline. We saw how this played out in the past couple of months. We didn't have a good start to our fiscal year. We actually had some losses throughout April. May has been a really nice recovery month. We're pretty much recovered, I would say. And I guess the takeaway from all that is that it doesn't matter whether you're losing or winning in the market. You have to have the discipline to be following whatever system you're following, not necessarily mine, but you have to have that discipline. If every day is a new day and you're doing everything different, you're not going to succeed. Trading isn't where we get our kicks. It's what pays for our kicks. So if you want excitement, the market is probably the worst place to be looking for it. Good trading is going to be systematic and it's going to be boring. I don't think I've ever excited anyone by telling them how I trade. I excite people when I show them how much I make, but the actual trading is boring and it's supposed to be boring. The excitement is going to be coming later when you count your winnings. So the key question is, of course, do you have the discipline needed? No need for an answer. These final thoughts here in these weekly sessions are meant to engage your brain. Ask yourself these questions and figure out where you fall. And of course, my advice is that discipline is one of, if not the key factor to successful trading. And that is going to be the end of this session for this start of the week. This is Andy Pedraza for Special Effects Academy. If anybody does have any questions, do feel free to ask them right now. Okay, then I wish you all a happy week. A recording of this will be going out within a few minutes, as well as an email summary. Thank you very much, and talk to you on our next session.